best known for his billion-dollar bet against the housing market in the early 2000s, has another prediction. And this prediction is really frightening. It's a prediction that we don't want to come true. It's one that relates to hyperinflation on a level which we haven't seen yet, which could be quite scary. Now, there's a lot of talk in the air, but let's jump right into today's video to see where the inflation levels are headed and what his prediction is actually saying. So, Michael Burry has a Twitter account where he frequently tweets economic predictions. And with the COVID landscape currently affecting how the dynamic economy is rapidly changing, Michael Burry is always giving his opinion on what he thinks is going to happen next, trying to accurately predict things. Now, with the recent COVID situation, the government has been printing trillions and trillions of dollars, and this has led some investors and some speculators to believe that we're on the verge of hyperinflation or some sort of unwanted inflation. Now, let's take a look at what Michael Burry has actually said. So, if we take a look at this article, it says, Big Short investor Michael Burry turns to Warren Buffett to underscore the dangers of inflation. Michael Burry cited Warren Buffett to highlight the dangers of inflation. The Big Short investor highlighted Buffett's warning that inflation erodes real returns, which is very true when it comes to inflation removing your purchasing power. So, Michael Burry did turn to Twitter to hammer home the dangers of inflation in a Twitter thread last Tuesday. Here's what he said. Warren Buffett's Berkshire Hathaway annual letters guided me tremendously earlier on. During the last great inflation, Warren Buffett wrote about the topic at hand, and for those eyeing the future, it's worth revisiting. The 1980s chairman letter. Burry shared several screenshots from Buffett's 1980s letter to Berkshire Hathaway shareholders. In the letter, Buffett explained that high rates of inflation act as a tax on capital, discouraging companies from investing by reducing their real returns. Inflation can also result in investors earning negative returns, Buffett said, because it serves as an implicit tax on their purchasing power, on top of the explicit taxes that they pay on dividends and investment gains. The average tax-paying investor is now running up and down escalator whose pace has accelerated to the point where his upward progress is nil, the Berkshire chief wrote. Burry dredged up the letter to emphasize that if inflation does ramp up, corporate profits today will be far more valuable than profits in the future. Taking Burry's lessons from 1980 and porting them to 2021 doesn't take much translation, he tweeted. So, if high inflation, each dollar of earnings today becomes important, he continued. Earnings 10 and 20 years from now, the corollary goes, may be worth substantially less tomorrow than today. Now, this is not the only thing Burry has said about inflation. As well as inflation leading to many reduced returns for many companies, Michael Burry also talks about inflation in relation to Bitcoin, gold, and other assets. So, as you can see from this article by Business Insider, we can see that Michael Burry expects the economy's reopening and stimulus to fuel inflation. The Big Short investor warned that governments might squash Bitcoin and gold to protect their currencies. Burry highlighted Germany's hyperinflation in the 1920s as a cautionary tale for the United States. So he does expect the post-pandemic economic recovery and another round of stimulus to drive up prices, and he doesn't see Bitcoin or gold as guaranteed havens for investors. As we know, Bitcoin has actually increased substantially last year, and many people have flocked to this as seeing it as a store of wealth. However, Michael Burry doesn't actually see this as a true solution to inflation, especially when governments are involved and they can crush these other things. So he continues to say, prepare for inflation, the investor said, reopening and stimulus on the way. Pre-COVID, it took 3 debt to create 1 GDP, and it's worse now. In an inflationary crisis, governments will move to squash competitors in the currency arena, Bitcoin and gold. Now, what's interesting is that, has he said that governments will move to squash competitors in the currency arena, such as Bitcoin and gold, as they have in the past? This is something that is already taking place, and this is something that we've discussed before. So, take a look at this short clip from the video we made last week where we talked about Michael Burry's opinion on Bitcoin. So, this is what he said in a tweet. So he says, legally violent, heartless centralized governments with a lifeblood interest in monopolies on currencies won't allow Bitcoin to thrive and remain decentralized in the long term. So in that short clip, we basically showed you that there are many countries such as India and the United States that are trying to see if it is possible to outlaw Bitcoin, especially because we know that it's a hedge outside the financial system. So continuing with Michael Burry's inflation on this article, so Michael Burry continued to talk about inflation on Twitter. He then quoted at length from The Dying of Money, Lessons of the Great German and American Inflations. And this was a book that he used to drive his message home. So this book, The Dying of Money, It's basically a book which gives you tremendous economic value in terms of what's going to happen in the next economic crisis with regards to key levels of inflation and money. And it basically talks in depth about how inflation can actually ruin your money, and it looks at past scenarios. So according to this website lifeclub.com, which is a book review website, we can see that this short summary kind of tells you what this book is about. So it reads, remember the financial crisis of 2008. Are you happy the worst is now over and the world can look forward to a period of growth, prosperity, and happiness? If so, prepare to be shocked. The current monetary system, by which the money in your pocket has no intrinsic value, is in fact incredibly fragile, and the next crisis is already looming on the horizon. So the book summary has 3 main points. The first point being why governments and central banks are deliberately making the money in your pocket less valuable, which is regards to inflation and how it removes your purchasing power, where the next crisis will come from, and how you can protect your life savings from being worth less than a loaf of bread. And the last point being how American locomotives were recently traded for frozen turkeys and why this may be the norm in the future. So basically, this book kind of outlines how bad the economic situation could truly get. So, Burry highlighted passages from the book about the recurrence of inflation throughout history, how it's usually preceded by an economic boom and a spike in overnight fortunes, and how it leads to soaring crime, surging living costs, and poverty. The investor compared Germany's path to hyperinflation in the 1920s to America's current trajectory. Germany, the United States, started by not paying adequately for its war on COVID and the GFC fallout, out of the sacrifices of its people, taxes, but covered its deficits with war loans, treasuries, and issues of new paper Reichsmarks, dollars, doomed to repeat. History is not useless, he said in another tweet. This text explores the 1970s American inflation, which is more relevant than one might think. Burry also drew parallels between the market mania in Germany before inflation took off, and the Reddit-fueled buying of meme stocks this year that led Robinhood to temporarily halt purchases of certain stocks like GameStop. So what he said is quite relevant to today, and it's shockingly irrelevant to exactly how things are playing out right now. The article continues to say how Michael Burry said, before the German hyperinflation in the 1920s, everyone from the elevator operator up was playing the market, and volumes became such that the financial industry could not keep up with the paperwork, and the bourse was obliged to close. Sound familiar? Hashtag Robinhood down. And when he says Robinhood down, he's actually referring to the many different trading platforms that have actually received a ridiculous amount of surge in users. As we know, year over year, these platforms are growing and the number of retail traders are spiking. There are so many different platforms that aren't even accepting users simply because the volume of users coming onto these platforms is so large right now. So it says Burry's latest comments echo his warnings of a massive market bubble and his description of the GameStop frenzy as unnatural, insane, and dangerous. So all in all, Michael Burry is someone that has correctly predicted key economic events in the past. Whether or not you like him and whether or not you think he's right, we should take into account what he's saying because he's previously been right, and these words may come back to bite us in the back if we look on these from a year from now.